Good afternoon friends, welcome to Nifty Times Now. In the previous video, we have discussed about the decision points combination with the price actions, how to enter a trade. So how important is the decision point? The decision point is previous day high low is how important for an intraday trader and the price action. So in today's video, we'll be discussing about the open price, how important that open price is. How important is open price? See in this example, they have shown the decision points and the price action. So price action, it starts from the open price, the price has gone up and came down like that. Okay. As an intraday trader, we need to wait for at least 15 minutes for the price action to be happen. That is why we require to wait for one swing has to happen. Then only we'll come to know the direction of the market. So the open price is very important because we want to know whether the open price is opening below the decision point or the above the decision. As an intraday trader, we know the decision point, the previous day or low is the decision points, and the price action, the swing is happening. Along with the open price, we get a crisp and clear entries in the trade. We go into the chart and see these open along with the open price. So I'm just removing this drawings. Okay, I'm removing this drawing. Okay, let the previous day high and low, these are all the decision points. These are constant levels for an intraday trader to take a decision. So if you see in this first the first candle, the first 5 minutes candle, the open price is above the decision point. There the previous decision point is previous day. It is opened above the 5 minutes. It gave one sell. It has come down. I'm just drawing the price action. From here it has come down. Then it has gone up. Then it has come down. So, okay. So in previous video we have seen that is okay when it is breaking the swing, you can enter into the trade and this will be a stop loss. Now, considering the open price is very important because it is not gone above the open price. So it is very important. The open price and the day's high is also very important. So this would be your stop loss for a safer trade. So in this case, if you see, are we entering into a proper trade? The market came down, it gave a sell and it went up, then again it broke that. What is that? It has not went above the open price. So unless it is going above the open price, the market is still in the sell. So we are getting a first confirmation. Okay, market is in the sell side only. What is the next confirmation you are getting? Okay, there is a 15 minute, there is a swing low as made. Still it's breaking that low. It's first is breaking the previous day high, breaking the first swing also. Then my trade is having a proper confirmation, is 100% I'm getting a confirmation market is going to go down. So the open price is also plays a vital role for us to take a proper trade. So in this first example. So in the second day, if you see that is in the second day, the market is opened below the previous day low. So what happened? Same, we draw the price action. It opened here. Okay. It went up, then it came down and it has gone up. And the price action again it went below the open price, then again it breaks the previous day low, breaks today's open price, it breaks, and also it breaks the today's swing. Can you see this? So our entry was as per our thing, this would be our entry. So I'm getting a double confirmation. Previous day lows been broken and today's open also it broke, and the first swing is also. I'm getting a triple confirmation for a trade as a buy trade because the market is now with the first 15 minutes or 20 minutes we get a swing. The market has came down below the open price, then again it pull backs, it breaks the open price. Also second confirmation is it broke the previous day low and the market is going up. And also the morning swing, first swing. So when this is done, your stop loss will be up today's low. Okay, and also you see like it is, you get the direction like it is okay. Still open price it didn't break. Once it broke the open rate, there is a swing has come. So there is one today's first swing is that low. This would be your stop loss. The third day you can see different scenarios as we saw, that is it happens. There is a different examples they are given. Market, we have to wait for our strategy is falling, that is we have to see the market is falling under our strategy. Our strategy is we have a constant levels, okay, previous day close or previous day high is there, I have a price action, I have a open price, based on that I am taking a decision, I am entering into a trade. Okay, it's not like we no need to rush into the trade. Every day there is not required that is you are into trade. You have to see whether the market is coming on falling into your strategy. So I have strategy, I'm clear with my strategy, I'm deleting this, I'm deleting the C. Previous day high, market is open above this, draw price action. 15 minutes, let it go. So what it did, the market went, come down, it's going on the sideways, it's going up, coming down. Still it does not come and touch the the previous day high. Now here it is going. So what has happened here? So now our trade will be, there is a first swing has happened. This is your swing high. So when it breaks this, I enter into the trade. And what would be my stop loss? My stop loss would be my swing low, or else my previous day high will be a stop loss. You can have these two stop loss. So here is they getting a direction. Market is not taken the previous day high, it's now trading above the previous day high. That is the first confirmation. Second is the market has crossed today's opening. This is your opening. Can you see this level is your opening? Okay, it is above the previous day today's open and above previous day high. Also it breaks today's swing high. Okay, so we are getting a triple confirmations. That is your super bullish trade. So this helps one intraday trader to enter into a crisp and clear trade. So the stop loss is going to help you. Like, okay, we know the stop loss also. The moment the market breaks, this means the direction has changed. So let us exit from the trade. Hope this video helps you. The series of these 4 videos helps you step by step process. Okay, we have seen which is not a constant levels, we know which is the constant level, and we have seen the price action. Now we have seen the open price, how important is. So as for an intraday trader, it makes your life very easy to have a patience, and whether the market is falling under our strategy, you can go into your trade. Thanks guys.